Hey everyone, Supermicro was one of the hottest AI stocks in the stock market to start 2024. However, the stock price has been on a downtrend since peaking around March. So the company is scheduled to report quarterly financial results on Tuesday, August 6th after the markets close, and investors are curious if they should buy Supermicro stock before it announces earnings. I'll answer that question in this video. I'll also preview what investors should look for from Supermicro stock when it announces results, and I'll reveal how my recommendation of this stock has worked so far in 2024. I'll share with you my recommendations for 2024 as they've evolved and how they've evolved. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so I'll start with my recommendations for Supermicro stock. Initially, around the second week of January, I recommended Supermicro stock as a buy. I rated the stock as a buy, and I told investors that the company's earnings prospects look incredibly strong, revenue is growing nicely, and the AI market is only in the very early stages of development. I was personally surprised by the rapid increase in Supermicro stock price in the following 2 months. Since I made the recommendation, the valuation absolutely soared. So then I told investors about 4 months ago on March 6, 2024, I made this video telling investors it was time to take profits and sell Supermicro stock. When I made this recommendation, when I downgraded Supermicro stock, the stock was trading at a forward price to earnings of over 38. That was a whopping increase of the company's valuation, where it never traded at a forward PE of close to 10 all these years before the AI wave started to take its valuation to astronomical levels. And I argued in this video that the valuation was too expensive, and I admitted that the company had great prospects and the AI wave continues to grow, but the company's valuation was stretched. It was getting ahead of itself, and I said it was a good time to take profits. Well, since I made this recommendation to sell and take profits in Supermicro stock, it has worked very, very well. You will have avoided a great deal of losses if you sold Supermicro stock when I made that recommendation in that video. The stock price has fallen from over $1,100 per share when I made that recommendation, and it's now trading at $698 per share today. So that was a good recommendation to sell. Now, let's move into the next quarter's earnings results and whether or not this is a good time to buy the stock on the dip ahead of earnings. So as you'll recall, the company reported a remarkable growth rate in its latest quarter. Revenue increased to $3.85 billion, with earnings per share jumping to $6.65 per share. That was revenue growth of over 200% and earnings per share growth of over 300%. Phenomenal growth rates, to be sure. And you might be surprised to compare these two and say, wait a minute, revenue and profits grew by that much and the stock price is down since the peak? And that's a result of how much the stock price had already increased. As I shared with you that chart, the stock price was trading at very high valuations, nearly 3 times the usual amount, nearly 4 times the usual amount of where the company's stock price had traded for in the last 5 years. So it was more than accounting for these excellent prospects in the valuation. The company also said that as new solutions ramp, including fully production-ready DLC, we expect to continue gaining market share. And they raised their fiscal year 2024 revenue outlook from $14.5 billion at the midpoint to $14.9 billion at the midpoint. And Supermicro has been continuously raising its expectations because results keep coming in better than the company's management thinks. It's already forecasting robust growth, but the growth that's actually coming in is better than the company's expecting. And so you can understand the investor enthusiasm around Supermicro stock. It keeps beating and raising expectations that are already very high. So for the fourth quarter of 2024, which ends June 30th for Supermicro, the company expects sales of $5.3 billion at the midpoint, with GAAP income per share of $7.20 to $8.05 in that range. So this revenue number of $5.3 billion at the midpoint would be another huge increase from the $3.85 billion the company reported in the third quarter. So revenue growth and earnings per share growth continues for Supermicro Computer. So what gives? Why is the stock price falling despite the company's excellent performance? Well, I'll highlight two reasons for that. Number one, the company is selling shares to raise capital. You can see the diluted shares outstanding increasing from 56,233 up to 61,431 year over year. The company is selling shares to raise cash. And you might say, why does this company need cash if it's reporting such excellent earnings per share and revenue is increasing? Well, it comes because there's a big difference between earnings per share and cash flow. And that's especially true for companies like Supermicro Computer that sell mostly hardware and that are growing as rapidly as they are growing. You can see net cash flow provided by operating activities for Supermicro Computer in the 9 months that ended March 31st, so in their most recent 9 months, has turned significantly negative. Negative $1.844 billion in cash flow from operations for Supermicro Computer in the most recent 9 months. That's despite revenue soaring and earnings per share soaring. Its same period in the year before was $672 million. So it went from significantly positive cash flow from operations to significantly negative cash flow from operations. And this is one of the reasons why I downgraded Supermicro Computer stock along with the soaring valuation premium. And I also highlighted that this negative is not alarming for a company like Supermicro Computer because of the way the business works. When you're growing your business as rapidly as Supermicro Computer is, then you have a gap between the money that you spend on inventory and then when you get paid from your customers. So you're growing rapidly and your sales in the current quarter is much larger than it was in the previous 6 months or the previous 12 months. So your collections that are coming in from previous sales are at a certain lower level, and the sales you're making are now at a significantly higher level. So the sales you're making now, you're spending money on the inventory to make these sales, but those customers that you're selling to right now are not going to pay you back until maybe 30 days, 60 days, or 90 days later, depending on the terms of the agreement. So you have a lower amounts of payments coming in from previous sales because your business has grown so much. And then you've got the capital, the money that those folks owe you from after making those sales. And that gap between the collections and the sales that you're making creates this huge negative in cash flow from operations. And this is typical for companies that are growing at this rate. Supermicro Computer will not be the only business that is experiencing this phenomenon with this kind of growth rate. Still, it's a concerning factor for a business because you need cash, right? And that's why the company had to sell stock to raise cash so that it can fund these working capital arrangements so that it can continue growing and continue offering reasonable terms to its customers. Of course, Supermicro can tell its customers, well, we're not going to sell you our product unless you pay us the cash first or unless you pay us the cash in 1 week. But if it starts doing that to its customers, then it might lose some sales. So it wants to keep reasonable terms. And then to be able to operate by offering those terms, it needs to raise cash so that it can fund its own operations, pay for inventory, pay for supplies, and keep its business moving while it waits for its customers to pay it back. So that's one reason why investors were concerned with Supermicro Computer. Another reason was that super premium valuation that I shared with you and I shared in that video I did in March, where the valuation had jumped all the way up to 38. And I said that this was too expensive for this stock, given its business model, given its profit prospects, and given its cash flow from operations. Well, that valuation has now collapsed. It's now trading at a forward PE of 16.5. That's down from over 38. So it's trading at a much more reasonable valuation now. So investors that are interested in Supermicro Computer stock, it now trades at a much more reasonable valuation. However, I will still advise to buy this stock, if you're interested in buying this stock, to wait until after earnings to buy the stock. It's still trading at a significant premium to where it historically traded at, right? Even after this boom from artificial intelligence, it was still trading at a forward PE below 10. And then before that, it was trading at a forward PE in the single digits. And the reason for this relatively low valuation for this company is because it doesn't operate with high profit margins. It's a low profit margin business, less than or around 10% operating profit margin. And so when you have a business with this kind of profit margin, it doesn't really trade at an expensive valuation. It doesn't trade at a premium valuation. And those prospects have not improved. Supermicro Computer is not expecting higher profit margins in the future. In fact, maybe lower profit margins because management is focusing on gaining market share. So for that reason, I still don't think you need to rush out and get this stock at a forward PE of 16.5. You can wait until after earnings. And if the stock reports relatively reasonable earnings and it's still trading at a forward PE around this range, I wouldn't be surprised if I come out after the earnings release and I upgrade my recommendation for Supermicro Computer stock. But I'm not quite upgrading it just yet. I want to wait for the earnings to come out. I want to digest that information and then make a conclusion after those results come out. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.